Good evening, everybody. This is Mike Filighera. I am with logicalsignals.com, and this is the Elliott Wave update for the NASDAQ 100, the NQ, for Wednesday, February 24th, 2021. A quick recap, we've been counting a corrective wave, a wave 2, and thus far it is really sticking to form and likely will meet some expectations. So let's kind of review where we are. As you can remember, we have labeled that this is a fifth of a fifth of a fifth, which is pretty definitive in terms of a near to midterm top. And right now that continues to hold. And the Elliott Wave count, or the move thus far, truly is fitting in a nice corrective structure. So we are expecting a continued decline for right now. We've not broken any of the guidelines or any of the rules, which would draw more attention to we need to refigure what this count is, and that then has to include new highs. Right now, that hasn't happened. Can it? Of course. Anything can happen these days. So we try to just follow the Elliott Wave pattern and allow it to then dictate where we're headed. But right now, we're counting a 3-wave rally corrective for a wave 2. So off of the 5, a 5, a 5, we counted 5 waves down of intermediate degree, and that would be as follows: wave 1, wave 2, wave 3, wave 4, and wave 5. That finished the first primary wave of the cycle level A wave down. That's what we're putting in. So on that mid to long-term picture, it truly is what we're really working through is the very initial stages of what may end up being a cycle wave 4 corrective wave down. So actually greater than a super cycle wave 4 down. And that should take quite a bit off of this particular index. But in any case, we're at the very beginning. So we finished wave 1 on the primary level. So now we're doing a primary level wave 2. And thus far within that, we've got a wave A and a wave B, and we're getting through the C wave, which would then end and complete this wave 2. So now we want to put some additional parameters around what is happening and where we can end up. And I'll show you that there's a nice, we'll just get this up. Nope, I gotta change this. Excuse me for 1 second while I change this. Come on. Thank you. And we'll go from, oh, come on. There. Too far. Let's start over. We want to make sure we get it close as we can because these are important. That'll live. I'd rather be under than over. 75, 25, yeah, good. We'll live. Yes. So we have now been working a corrective phase. The minimal that we would be looking for would be a 0.382 retracement. That's this level. It has exceeded. Then we knew that when we got back above that, like from this decline this morning, when we got back above, it was into the next wave and that the decline was complete. In fact, we truly got some signals earlier than that, but that was the definitive signal that the selling was complete and the buyers had returned. In any case, we continue to count. Now the market has gone up to the next Fibonacci resistance level at 13,327, got its nose above that, got what we would consider enough of a break, but then it sank back below and remains below right now. but I think that's only temporary, to be honest with you, because the break above and the dip back below, if it gets back above it, it's going to end up here, 13,462. And we're going to give that a little bit more room, because at the same point, the 200 is going to come into play. And then it's going to be this. So we're going to build a zone right here where the potential that this particular wave is going to end has grown stronger. Now I'm going to throw one more point in there, which is very valid. We have the A wave here, and the A wave was 506 points. So we have 12,757 minus, and then we subtract that from 13,263. That's 506 points. That's wave A. A very common relationship between an A and a C wave of a corrective move, a wave 2 or a B wave, etc., is that wave C will equal in length to wave A. So we take 506 points, we're going to add it to the bottom of the B wave, and our total is 13,464. And I'll tell you the truth, if I had been a little bit cleaner and got that right at that 13,900.50 and got this at the 757, that 618 comes at 13,464 on the nose. So we have a zone that really, depending on where this 200 ends up, if the market rallies, it'll probably inch flat. So the zone's really going to be 13,000, let's say 440 to 13,464. And I believe the next Fibonacci level would be able to contain any overflow. That would drive it up, an additional almost 100 points. So, and I truly would not, I think it's going to run out of gas simply because of where its starting point is. And we have seen, actually, it already has put in a new high, and it could be done, because that's all that really requires, is be a 5-wave structure and exceed the end of wave A, which it has done. By the way, this B wave is an irregular B, quite acceptable in a corrective run. You can see that the B wave within the B made a new high above A. Often you don't really look for that, except in this particular instance that it's a B wave correcting an A wave. Then they have different forms that they can take, which makes counting corrective moves more difficult to trade, just more difficult to follow, because it can take several different forms. The structure itself can turn into an extended, protracted, range-bound move, which ends up being like a triangle, and then eventually just kind of thrusts itself out of the triangle. So there's a myriad of different possibilities, this being one, where we call this an irregular B, and because the sell off of that high straight down was pretty intense. It nearly took 2 hours, but the lift off from that low, when it was done, you knew it pretty much before, when it was started to break back about 13,100. It was getting pretty clear that, and that's 120 points off the low in zippity doo dah. So it was very clear on the intensity of the sell, of the buying. We're taking the sell, the selling was done. And then it was off to the races for the balance of the session. This was a decent decline, but tradable. But overall, it was a good trading day. If you stepped back and you recognized that selling was done and the buyers are stepping back in. Because right off the gate, I was anticipating that when the market was closing or trading above overnight here, but had pulled back, I was feeling that it still should turn and continue higher. It would be like a 1, a 2, 3, 4, 5, etc. But it stopped on a dime and it turned, and that intensity drove it straight back down. And as soon as it started to break the 382 level, at the same time you're realizing, oops, I don't want to be long, I need to be short. And you could capture the balance. So you may have lost some, but then you could capture it back. So that's also the point. Don't sit and wait in a negative trade that's going to break your back. Go ahead and take the hit. So you pick your point, you have your stop in place, and you may need to reverse. In other words, it's like if you were long, you're no longer looking for longs. It's broken a point where it's going to go back down and likely to the next level down. And sure enough, that's exactly what it did. So you're going to fight doubt, you're going to fight many different things, but systematically, the psychology in the market is that the selling is going to continue. Whatever's going on there, it's going to trigger others and what it should continue and now reach this level. And sure enough, it goes back and exceeds that level, but it whipped around. So this actually took place and it was like zip and then right back up. So the minute it actually started to break above and then started to break lower levels, you could take a chance. You're going to cover a short and reverse. So market watching will become important, and paying attention to points and understanding how these levels function, how the moving averages function on these shorter term charts. So again, if this is going to start to decline, we have a 200-day moving average on a 2-minute basis, on a 5-minute basis, and on the 15-minute basis. And that's all going to be above where it is on the hourly basis. I'm going to say hourly, we're at 13,439. We're bringing it down, and they're much lower. So if they start to break these levels, we're not going to go up there. We're actually going to head lower. We need to go up and break this to get into the zone. If we don't, these areas down here likely have completed the move. If that starts to break down on these levels. Otherwise, we've been looking for these on a 15-minute level, certainly for the 50 to hold and the 200, pretty much, but definitively right there. If it breaks that, comes down, comes back up, you're going to have to weigh out. It's going to have to come up and start to break again back above those to prove that the buyers are back in control. More on that, if indeed we ever go back to having a trade room. This is part of what trading in a trade room is, that you're working these different levels and you're knowing what they mean and how they function. And then you can take it down to 5 and take it down to 2. 2-minute, of course, are going to be entries so that you're nice and tight and you can capture more of the move. And your 15-minute and out are going to be able to give you a better gauge on if they start to break levels, where it's going to go. Same here, but say if you break that 284, you're not even, you're likely going to hit the 15-minute 50, but 284, you're going to come down to here. Here to here the zone would be. And now you're breaking here and here. So you can see how they start to come together to give you different areas where the market may go to, reverse, et cetera, et cetera. More on that if we start a trade room, because that is exactly what you do live. Because right now this is live, but it's not really moving around at the moment. In fact, it's very still. We've seen this week, because this is when I normally put on this update, that the market has at times moved a whole lot faster than it is right at the moment. In any case, for tomorrow, I'd be looking for continued upside unless we begin to break below our 200-day moving averages. And here on the hourly, it's going to restart to break below the 50, the 20, and then the Fibonacci support, which should be found at the 382 level, if indeed upside is going to continue. But here we've seen this type of a move. If it happens again, it's going to be significant because that would suggest that this high from earlier today was it that completed the second, the C wave, and then in turn, the primary wave 2, and we're dropping in a 303. So we do want to pay close attention here. That would be a trend change. On a day-to-day basis, that would be a trend change. So you want to be very careful. And I'm going to leave it there. If we get the downside, then you know what it is. Otherwise, we're looking for this zone, 13,440 to 13,464. And we're looking for that to contain and complete if it hadn't already been done. So we've got upside and we have downside. And so we should be able to trade tomorrow no matter what happens, because we can put some parameters around it. I'm going to wish everybody a good evening. Have a great trading day tomorrow, and we'll pick up the conversation again tomorrow evening. Good night.